Hello again. Let's have a look at speed. Speed purely is when one side of the market continues to increase in its transacting. So we have sellers selling here. Now sellers are continuing to sell, and they are selling in a faster raw amount of time in comparison to the amount of time it took to complete that bar. So we measure each bar's transacting time in raw seconds or raw minutes if we're using a longer time frame. So again, speed is just another component of what we use to find high quality setups, but just consider time as an increment of measurement will not allow you to produce a speed reading, because 1 minute, it takes 1 minute. Also, time has the variable of volume in it, so we do not get an accurate reading of horizontal space on the chart. So again, speed is just purely the commitment that is shown by one side of the market. Then we've got to use that speed as a combination of potential entry-exit setups, including all the ones discussed so far, if the market is square over square, where the market is in comparison to prediction. We can see here we have a speed reading of the buyers being higher, but we are below our predicted target line to the left. Once we get above it, we have no speed reading. We almost reach our prediction here, then we have our speed reading here. So that's what speed will do for you. It is showing you the commitment of one side of the market. Take into account, this is my prototype version of the software where I created a lot of these features. The actual finished product will show these speed increasing bars printing in a bolded print, so that for the intraday application, where the people need the speed and need to know exactly what's going on right this instant, they'll know that exactly on the chart rather than have to refer to the bottom of the chart. The other component related to speed is the overall speed of market transacting. You can see here that in the first hour we're transacting fairly rapidly. The blue bar the buying speed, the red bar the selling speed of transacting. Market slows down, continuing to slow down through lunchtime. So you can see that's also confirmed by the amount of horizontal space taking up. If the market's slowing down in transacting, it's going to take up less horizontal space. When we're using equivolume charts, obviously we have a fixed increment of time involved, so we need to create another way of reading speed. On these two bars here, we would be looking for a reduced amount of volume on this bar in comparison to that bar. Now, why is that? Because price has gone up, we're able to push our way through offer, and it has done it with less volume. Think about what is required to take price up and what offer is letting you to take price up. If you need to buy hard, there's a lot of offer in front of you, you will absorb more volume to do it. That is another way we use volume on equivolume to read as speed.